Welcome to our second part of the BMF Northwest Young Professionals and Student Chapter webinar series. As BMF is celebrating 45 plus, we're hoping years, as an organization that stands towards socioeconomic transformation, we saw it fit to have a webinar that speaks to managing finances, especially for our students, as well as young professionals that are just starting in their various industries. So this webinar serves as a platform for a comprehensive and we're hoping an engaging conversation towards managing finances, towards building and working towards tools on how to manage our very limited finances. And our guest speaker for the evening is not a stranger to the BMF community, particularly of the Northwest community, Ms. Julia Sibanda, who is currently a lecturer at the Northwest University under the Economic and Management Sciences faculty. And she is a lecturer. She's also a financial literacy coach, and she's also a candidate of master's towards management accounting. And we saw it fit to bring her today to just take us through the conversation of finances for Black students, for Black young professionals that are starting. How do we navigate through finances? How do we navigate through our first salaries? And so without any waste of time, I'd like to hand over to our guest speaker for the evening, Ms. Julia Sibanda.
Good day, everyone. I hope everybody's well and safe. We have a lot of presentation to discuss, a lot of things to discuss because finances is broad and there is a lot of issues that we need to touch on and we cannot really do it in parts because then it's not really effective. So I'll try to finish everything in time, just touching up on the most important things. So just as she mentioned that Julia Sibanda and I'm a lecturer at the Northwest University, lecturing income tax for second years. Now, I just want to talk about something that, this is really a great initiative and I was thinking about it just now and I was like, I wish I had this opportunity because how I, got into financial literacy is because I was experiencing challenges of my own. So I'm an accounting graduate and people think because you did accounting in school, that means you actually know about money. No, you actually know how to prepare financial statements for a company. However, when it comes to personal finance, it's a different issue. So I struggled with my own personal finances when I started working and I made a lot of mistakes. And a question found on me that, what could I be missing? I mean, what is going on? Is this it? I'm earning income and every single month I'm basically trying to just get by from payday within 5 days after I've paid off all my debts, mainly debt. Then I'm back to square one, then I borrow, then next month the cycle just goes on. Then I saw that this cycle will never really be broken. So I just wondered if I'm the only one experiencing this challenge as a graduate. And I saw my friends also experiencing a similar challenge. And then that's how I basically said, you know what, there has to be a solution to this and let's find that. And that's how I got into my master's and I found some interesting results. So which I have included in today's presentation. So I hope you will learn a lot from it. Without further ado, I would like us to get into it. So today I'll just touch on income, expenses, and debt because those are the most important elements that affect young adults, more specifically, who are going into employment. So I'm sure you've heard of the term financial literacy and personal financial management. So that basically refers to the knowledge that you need in order to make financial decisions. So if you don't have that knowledge, then you won't know what to do, what to look out for, what is right and what is wrong, right? As easy as it looks like, it's like you're supposed to just take your income and subtract your expenses. That's not exactly how it goes, right? So the aim of this webinar then is to discuss how to draw a personal budget and how to downgrade on non-essential expenditures. As I said, it's not as easy as just deducting your personal expenditures. Then managing your credit profile. This is a term that you will come to know, especially when you start working and you enter your job market, that you need to manage your credit profile. I will discuss why that is important for you to do. And then you also need to know how to use and manage debt. Truth of the matter is that we cannot avoid debt. That is the truth. So now, how do you manage it and how do you make debt work for you rather? Right. So the roadmap to financial literacy, financial wellness rather, remains the same. Firstly, you are going to earn. As you are going to enter the job market, you are going to start earning your salary. Now, you want to know how to keep that salary, meaning how to spend less than what you earn, right? That is important because then if you keep some of your salary, then you can grow your salary into investments. And when you grow that into investments, then you will have assets. Then that's how you build your wealth from there, right? So the three components is your income. Income is basically the money that you earn, that is your salary. If you have any other jobs that you do, or you have any other money coming from somewhere, then that will be your income. Then your expenses is everything that you pay for. That is your debt installments, your living expenditure, and so on. And then debt is the money that you borrow, whether being it from financial institutions, from your friend, anything that you owe, that will be your debt. Then investments and savings. Investments are long-term, right? That is money that you put away in something. You can put it either in banks or you can put it in property in order to grow it. Savings is money that you put away for a rainy day. That could be your emergency fund, that 5,000 that you have there, or 500 that you have there, that really does not generate a lot of return, but you have it for emergencies and so forth, right? Now, a personal budget is important. Why is it important? It will assist you in managing your expenditure, as we said, right? Because if you don't have a budget, number one, you will not know how much you actually need to pay for every single month, right? You will not know whether your expenses exceed your income, right? So that goes to bullet number 2, that it will help you in setting and tracking your financial position or liquidity. It tells you where you are with your finances. Do you have money to spend? Where do you need to cut off? What are you spending on? That's why your budget is important, right? And then it will also help you to manage your overall finances so that you can meet your financial goals. So you'll be able to say, okay, I'm earning so much. These are my expenses. Where can I cut back so that I can have enough to save? If you want to save for something, which will be either a property, a holiday, or whatever your financial goals are, right? So that's why you need to have a personal budget, right? Now, drawing a realistic budget. Most people, they do draw up a budget. However, they feel like it's not efficient because after they draw a budget, they find that at the end of the month, the actual budget that they've drawn, maybe it says that you will have 300 at end of that month. But by the time that month comes, you've paid all your expenses, that 300 rand is not there. So it doesn't match. What you have on paper and what you actually have at the bank doesn't match, and they feel like it's pointless, really. But the issue is that in drawing their budget, what did they take into consideration? So you need to go into drawing a more detailed budget rather than just saying income, your salary, less all your expenses. You need to rather understand the type of expenses that you pay every single month. Why is that important? So that you can see where your money is going. And is it necessary for you to have that expense? Is it fruitful for you to have that expense? Some of the costs you could actually avoid. Some of the costs you are paying and you don't know. If you go through your bank statement, you will see that there is this small 2 rand here, 5 rand there, and so on, that you are paying, that you are not even aware of, right? Hence, you are not taking those into your budget, your actual budget that you are drawing, and then you will not understand why your amounts are not matching, right? I'll give you an example. I recently went through some bank statements for a couple of people, and they buy airtime, like 12 rand airtime, every now and again. In a day, they can buy like 3 times airtime here. And I calculated, I started to realize that there's actually a lot of transactions for airtime. And then I added all those transactions. And I think it was 1.3, just 12 friends every single day, 3 times, 4 times a day, it was 1.3. So most of the things that take away our money are small things that we don't actually realize. So hence it's important to always print out your budget, your bank statement, and go through it line by line and see what are you paying for? What is the actual cost of what you are paying for, right? So you need to classify your budget into debt installment. Those are the costs that you cannot avoid anyway, you need to pay for every single month, right? So you classify into your fixed costs. Your fixed costs are the costs that you will pay that remain the same every single month. So if you're paying for a car 3,000 rand every single month, you know that 3,000 will go into my account, and that is money that I cannot change, I cannot do anything about. So the aim of this is so that you see what are your committed, right, expenses, the ones that you cannot change, and then your flexible expenses, the expenses that fluctuate according to your usage, meaning those are expenses that if you, for instance, take away, those are expenses that if you eat less, that expense could go down, meaning you can control those expenses, right? And then you need to classify into necessary expenses as well, right? Necessary expenses, is it electricity, for instance? Is it petrol, for instance? Is it, it could be what, a policy, for instance, right? So those are not debts. However, those are necessary living expenses that anybody cannot go without, right? So then you will see that, okay, I have debts. This is how much goes out of my salary I need every single month for my debt. So you have 10, let's say you are earning 10,000 rand, then you know, okay, 3,000 every single month goes towards my debts, right? And then you know, 1,000 every single month goes to my necessary expenses. These are the ones that I need and I cannot do anything about them. And then after that, you say, okay, fine, I have 6,000 left. Then out of that 6,000 then goes to my living expenses. That is my rent, that is whatever. So this 6,000, is there a way I can manipulate it? If I'm paying rent 2.5, can I go and look for a cheaper place? If I'm paying DSTV for 800 rand, can I cut on that? If I'm paying petrol for 1.5 from that, why am I spending so much on petrol? Am I making all these trips that I probably should not be making? So you are able to every month say, you know what, let me try to cut on this 6,000 that I have every single month that I have for living expenses. Let me try to control and cut back on certain things so that I can save from that. And those are the costs that you play around. So that's why it's important for you to draw up a detailed budget so that you can see where you can actually cut off and where you can save money, right? The main thing is, if you have 10,000 rand and 3,000 is already committed, 1,000 is already committed, 6,000 rand. What is the best thing that I can do with this 6,000? How far can I go with this 6,000 rand? How far can I stretch this 6,000 rand? And the only way to do that is to see where you can cut, right? And the other way is to also review things like your policies. Things like your policies, normally sometimes you find that you're actually paying more than you actually should not be paying. So if you find that, okay, I'm paying 200 rand for a policy of 20,000 rand and I'm getting 20,000 rand, is there any other financial institution that can offer me the same 20,000 rand, but for lesser, for 180 or for 170? That 30 rand makes a difference. Then once you get that 30 rand, what do you do with it? Don't just leave it there. Immediately reallocate that 30 rand towards your savings, right? So that is how you go around with your budget. Do not adjust your budget to suit your life. Don't say that I want to have Netflix, I want to have Showmax, I want to have DSTV, I want to have a car, I want to have this. And you want, so you, after you've done all your calculation, you realize that actually your living expenses, the lifestyle that you want is 15,000 rand, for instance. However, your salary is 10,000 rand. It doesn't work like that. You start by saying, my salary is 10,000 rand. Now, how can I live within this 10,000 rand? So your lifestyle must go into your income and not that your income must stretch itself to suit your lifestyle, right? So do not live within your means. Now, most likely, I'm sure you've heard with a lot of talks, they say that live within your means. Don't live within your means. If you live within your means, should anything happen, then you have no room for emergency. If your expenses are 10,000 rand, your salary is 10,000 rand. Should you get flu, you need to see a doctor. There's no room there. Immediately you are in debt. You are into a negative balance. So if your salary is 10,000 rand, I would say by all means try to fit your lifestyle into 8,000 rand. And the 2,000 rand is for savings and investments. They say that you must save 10% of your income. I say make it 20. Right? We'll talk about that later. Any extra income that you make, you invest. Now, if ever you get a bonus, if ever this month you have additional income, you see that it was a good month, you didn't overspend and so on, don't find a way to spend money. Don't make plans with each and every income that comes to you. Everything, tell yourself that my income is 10,000 rand, my lifestyle is 8,000 rand. Whether next month my salary goes to 15 or whatever, my lifestyle should not change. My lifestyle must always remain at 8, right? Now, there are people who get, for instance, why is this important? You will start off with a salary of 5,000, for instance. Then in the next year, say you are doing articles or internships and training, those who normally have to go into training before they get qualified and then they earn a certain amount of money, right? So if you keep adjusting your lifestyle with your income, you will never have enough money. And that's why it's important to rather manage your expenses than try to make more money sometimes. Yes, do more money. But if ever you think the fact that you don't have enough money is the problem, that is not the issue. If you have 10,000 rand, you'll find a way to blow it. If you have 50,000, you'll find a way to spend it as well. But if you can manage 10,000 rand, even when you get to the 50,000, even when you get to the 80,000, you will be able to manage it. Hence, it's important to rather manage your lifestyle than trying to manage your income. Any extra income you make goes towards your investment and not to promote. Yes, you can make few changes here and there, but not so drastic so that they eat away at all your extra income. The other one is to increase your income streams. As you know, nowadays it's very hard to survive on a single income. So a little bit of 200 there from a part-time job or anything that you can do always helps. We'll talk about income streams later on as well. Have goals every single month that you want to achieve. If you don't have goals of that you want to achieve with your finances, most likely you will spend your money and you won't know what you're spending it on. Rather, if you have goals of saying that this month I want to save 500 Rand, right? I think I saw this template once of, is it a weekly saving that every day, Monday you save 2 Rand, 3 Rand, and so on. And you may underestimate, I mean, why should I save 2 Rand on a Monday? What am I going to do with 2 Rand? But that's the thing with finance. The small steps make all the difference, right? And discipline, discipline, discipline. You can draw a budget, a very good budget. However, at the end of the day, what will make it work is you sticking to it. If you don't stick to it, it's still nothing but a budget. So discipline, 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 right? Go through your bank statement, as I said, and to identify any hidden costs, right? And to see your patterns as well. Your patterns as to what do you spend your money on. You'll most likely pick up on all your patterns. Do I buy airtime a lot? Do I eat out a lot? You'll see patterns there. Do I buy clothes a lot? What is eating away my money? And then you know where the problem is, and then you can come up with solutions to say, oh, let me eat out less, right? These are expenses that you can consider cutting. I will not go through all of them. The slides are there. I'll make them available anyway, I'm sure. And then you can access them at a later stage so that you can go through them by yourself. But these are common things that normally people spend money on and they don't realize, right? As you start working, you will have to pay rent. You will need accommodation, standard, right? Do you need the big apartment with the garden, the balcony, and everything? Not, right? Please consider sharing. I know you are straight from university and sharing may not actually be something that you want to do. You want your freedom, you want your space. If you want your space, then go for maybe a bachelor rather than a 2-bedroom apartment. Then you are paying the rent. Remember, at the end of the day, the rent is not an investment. There's no even a return on it. So that is not the time to be splurging on rent, right? Gym memberships, that's something else to consider as well. You can shop around and see what you can get. Nowadays, there's discounts. If you have medical aid, if you have this, you can get discounts. TV package, this one, 800 Rand DSTV package. Maybe you can go to 300 Rand and the 500 Rand goes to a fixed account, right? I know a lot of people don't like this one, but 500 Rand, think about it, 800 Rand multiplied by 12, right? Yes. Plus Netflix nowadays and Showmax on top of that, right? And then data, number one, right? Now with data, my suggestion would be, instead of buying 12 Rand, 12 Rand, 12 Rand every single day, what you do, you go, you get, nowadays we have SIM card only contract. It's not a debt. It's a SIM only contract that you take. You don't take a phone, you just take the SIM card, you pay 300 Rand, they give you 40 gig and so on. We also have Rain contract, and it's unlimited data for $2.99, I think. So rather go on a fixed plan than buying every single time that you need it. Because if you multiply how much you've actually spent, you add everything up, how much you've spent, you realize you've spent over 1,000 rand versus you could have spent 300 rand, and that 700 rand could have gone somewhere else, right? And then entertainment as well. Plan ahead. Don't spontaneously wake up one day and decide, actually not decide, wake up one day, you get a call, and then you just realize you spent 900 rand, you didn't plan for it really. Please don't do that. What I do, I have different cards. I have one card for entertainment. That card never has anything more than 300 rand. The aim is that I swipe it and then it says insufficient funds, time to go home. But if you leave all your salary in one card, you're going to spend it, right? So put measures in place, you know your weaknesses, put measures in place to avoid that compulsion to act in the moment and be impulsive, right? The main thing with finances is planning. If you don't plan ahead, you are most likely to make mistakes. Hence, I say a budget, so that you plan for your money before you get it. Because once you do have your money, chances are that now you'll be impulsive, right? Especially now when you start working and you know all these things that you've been wanting all this time, the sneakers, the whatnot, you just want to buy, right? So takeout and so on, please be on the lookout for that. Takeout now, we do home delivery, and then the cost is actually more, and then you still pay delivery fees. So food of 40 rand, you actually end up paying close to double, right? Those are costs that are not necessary, right? So please be wary of that. Electricity, I still switch off my geyser, people. I know in summer, 1 hour is hot. In winter, 2 hours, yes. Because, and you know what I do, when I get paid immediately, I go to the petrol station, I fill my car up, full tank. That is for the whole month. If it finishes, it finishes. I'll have to just make a plan. I buy my electricity for the month. I now have an idea, plus minus how much I use electricity for the month. I must budget that. I see, okay, fine, it's going down. What's going on, you see? And then, please, the other one is that I want to just talk about before I move on, is this one of policies. When you start working, I know you will be told you need policy for death, for funeral, for life cover, for retirement. What else? Policy. They will be coming everywhere, right? Now, my advice, and this is the honest truth, you do not need so many policies. You need a good funeral policy, one good one. Don't take multiple ones. Have one that covers you for everything, and one that is cheaper. So you need to shop around, especially for funeral policies. Don't rely on somebody else's advice to say, oh, this is the best one and everything. Remember, if somebody is selling something, their advice is biased. Obviously, their policy will be the best one. So your job is to shop around and compare and say, what is the best policy that I can get? If I'm willing to spend 300 rand, what can I get for 300 rand and get cover for everything? I have one funeral policy myself. I had multiple then. So I've learned the hard way, just one. And then life policy, you need one as well. Just have one good life policy. You know, just to make a joke, I hope it's not in bad taste. They once called me and they said, we are offering a funeral policy. I'm sure they call every day. And then they say they're offering a life policy. And I said, I already have one. They say, oh, but you can have another one. In my mind, I thought, how many times am I going to die? Really? I'll die once. right? So I have one funeral policy, okay? And the other thing that I want to advise you on policies, okay, you need a funeral, you need a life cover, okay? And then you need retirement, those three, right? The other thing that you need to do, once you get employed, some employers, they offer you things like life cover. It's included or it's deducted already in your pay slip. So don't duplicate things that you are already receiving at your workplace. So please find out, even funeral, I know where I work, we do get some funeral cover, right? So please consolidate everything. Consolidate what you get from your employer, what you get from everywhere, and say, okay, fine. If you have a funeral policy from your employer, that is a good one. Don't get another one. If you have a life cover from your employer, because already it's deducted from your salary in any way. So don't be over-insured. There is something called over-insured. So please don't do that. And then renegotiate every single year. What I do, I go through all my policies and I shop around. I ask them again and say, can you negotiate? Can we take this cost down? Most likely they are willing to take their cost down, especially with cars. If you drive a car for 2 years, you didn't get into an accident, and you get older and your driving experience and everything, they are most likely to take your premiums down. So always, every single year, review your financials and call the financial institutions and find out whether they can work out a better package for you, whether they can give you a discount. Always ask, especially when it comes to policy. You need to ask, what are you covered for? Is it necessary? Because they will say, oh, include this, but it's not necessary for you at that time to include certain things. Some things will not affect you now. Those are things that will affect you at a later stage. So you can always amend your policy at a later stage, because that takes your premium higher. So it doesn't make sense that you pay for something now that will affect you only when you are older, right? So you don't need to include things like that, right? And then I will advise you to take your life cover now while you are 22. It's going to be cheaper. Once you are older, it's going to be expensive, because, you know, as you get older, you get sick and everything. So now you are higher risk, right? So that is that. I spend so much time here, right? And then habits that can save money. I'll just quickly go through it because I really want to talk about that. Take your own lunch. I know it's not nice to take a lunch box, but take your own lunch. Once you are hungry, what I realize is when people are hungry, they will buy the most expensive food, because when you are hungry, you don't want to wait. You are impatient and everything. You are most likely to buy a lunch of 150. So don't wait to get hungry. You know already you'll be hungry at work. So get ahead of the situation. And then I do what I call a non-spending expense week. Like I said, I fill on my petrol. I feel I have electricity in the house. I have food. I have no reason to spend money. So I do what I call non-spending week, meaning the whole week I don't spend anything, right? I treat myself like a child. I give myself allowance. In as much as I'm old, yes, I work for my money, but as well, I have to treat myself like a child, where I say, Julia, your allowance for the week, it's 100 rand for you to buy ice cream. And once it's finished, right? Then the other thing, you need to replace one expense with the other. You cannot have it all. If you really, really love TV, I know with guys, super sport, they can't sacrifice for a lower package because it doesn't have all these super sports. Apparently there's different super sports. So if you love TV, you must sacrifice somewhere. Either you cut on the entertainment or you cut somewhere. But you cannot want to have the TV, the takeout, the sneakers, the big accommodation, everything at once. No. Say this month I'll have this. Then in the next 3 months, then I can get a sneaker. then whenever I can get this. But everything can happen together all at once. Sacrifice something for something that you love more. And that's how you have it all. It's not that you can't have it all, you just can't have it all at the same time. Right. Then compulsive buying, please give yourself cooling period. Now, I know I'm guilty of this. If I see a pair of shoes, especially sneakers, let me not say shoes, sneakers, you know, I feel like, and I wear size 5, I'm like, I know when I come back, I will not find a size 5. And I feel like this is the only opportunity I'll ever get. And if I miss this opportunity, I will never get another one, and then I will regret. Right. But funny how when you go home and you cool off, you don't even realize, you're like, why, what was the fuss about? I don't even like it anymore. The following day when I go, I'm like, what was I stressing about? I don't even like that anymore, right? So please don't be impulsive. If you love something, go home. If you still like it after 3 days and you can afford it cash-wise, right? Then maybe you can. And stay away from extras, you know. You go, you buy, I'll just give a simple example, a burger with extra cheese, with extra mayo, with extra everything. All those extras you pay for. There's no extra that you don't pay for. And you don't know. You're looking at, oh, the price is 50 rand. But after they add all this extra, what. So hence I say most institutions, they like to offer you, oh, you can add this. No. Even with a car, you'll see when you buy a car, they will say, add smash and grab, add this, add this, add this. Identify what is necessary. Whatever is not necessary, take it out because you're going to pay for it. All right. And then read your receipts very carefully. Sometimes we swipe, we don't even realize how much we swiped. You understand? They add this 2 rand, the whatnot. Like when I went through my bank statement, I realized that, oh, every time you swipe or this happens, there's an extra charge in everything. Things that you don't, all those costs that as they're sneaking in that you don't realize, those so that you can avoid them. The main thing is that you know so that you can avoid. Utilize your discounts and loyalty cards, right? I was telling someone that, I mean, I use loyalty card. I fill in the same petrol station every single month. I get points. Like now I have like 150 of petrol, 150 rand. So that is 150 rand free. So in that week where I'm not so financially equipped, I can just take my 150 and go fill myself some petrol there. You know, that is things that you can use. So they have all these membership things that, oh, there's 50% if you swipe your loyalty, whatever. You may say, it's 2 rand. What am I gonna do with 2 rand? Like I said, with finances, you won't wake up one day and save 10,000 rand. No. You save 2 rand. Today, tomorrow you save 3 rand. End of the month, those 2 rands, 3 rands, they make up that 1,000 rand. That's how it works, right? Be a minimalist, only buy what you need. Before you buy something, do you really need it? Really be honest with yourself. Do you really need that thing, right? I bought a blender. I don't even like making smoothies, but I bought a blender and I've used it once that day when I was happy. 2 years, 3 years in, still not using it. So those are things that we buy, and we don't need, right? Have a target every single month that you want to achieve. Like I said, give yourself small targets so that you don't get overwhelmed. Say, I just want to save 200 rand this month. Give yourself that challenge and then, right? So those are how to manage your expenses, increasing your income streams. As we know now, with COVID and everything, a lot of people have felt that, you know, there isn't a lot of opportunities with regards to with regards to opportunities that you can use for money, businesses, and so on. I just saw a comment here. Yes, life cover does include the funeral cover, but remember, life cover is only for the main member. So when you take a funeral, people normally include the family members and children and so on, while a life cover only covers you, the main member, or unless you cover each and every person individually, and then it's expensive, right? So increasing your income streams is a great way to generate finances. Like we said, at the end, you will save, yes, and you will have some extra money at the end of the month. But it doesn't hurt to still increase your income so that you can buy investments and so on, right? Investments, I always tell people that if you want to start increasing your income, look at your immediate, what do you have? Your talent, your skill, right? The resources that you have currently. I'll just provide an example with myself that like I said, I come from a background of accounting, right? Then I went into lecturing, and then I was like, I know accounting, I don't have that many talents anyway. I know accounting, what else can I do with my talents and with the knowledge that I already have, right? So that's when I said, let me apply the knowledge that I already have in order to grow my income streams. And I went into shares and so on and other investments. So I started small with already the resources that I already had and the knowledge that I had, right? So if you are a mechanic, for instance, can you do a part-time job? If you are good with nails, can you become a nail tech part-time? If you are good with cooking, nowadays people do YouTubes and everything. There is a lot of ways that you can make money. Excuse me. Sorry. Sorry about that. So just to wrap up on income and expenses, be honest about how much you earn and live below your means. Do not spend your income before you get it. So don't start borrowing throughout the month so that by the end of the month, by the time your money comes here, you've already spent it anyway. Draw a budget, stick to it, and then have some money, and then save first, then spend what is left. Very, very important. When your money comes, if you've already drawn in your budget that you're going to save 500 for that month, take that 500 and already deposit it into your savings account, and then start spending the 9.5 that is left. Now, let's get to the interesting topic. This is something that you will be faced with a lot. So immediately when you enter the job market, financial institutions start coming. They offer you, they say you can qualify for credit card, you can qualify for this, you can qualify for that. You can afford, right? Afford meaning you can pay the installment, right? The question you need to ask yourself at that time when they are offering all this debt, do I need this debt? And it has been found that most people, even though they do not need the debt, but because they have access to debt, they will still take it and utilize it. An example, you will go to a financial institution and say, I need 5,000 rand. And they say, oh, you qualify for 15. And you say, give me the 15. You didn't go there for the 15, you went there for the 5. Take the 5, even though you qualify for 15. The thing with money is you'll find a way to spend it. and you'll always have reasons to spend money. And those reasons are endless, right? So easy access to debt, that's number one. That's what you will be faced with, right? And then lack of financial literacy and financial preparedness, but that won't be a challenge now because we are doing this now, right? If you go there and you don't know the difference of a personal loan and a credit card and a mortgage bond, clothing account, the difference in the sense of financial implication, what are the financial implications of each? How do you make a decision as to which one is best? You see, so I will advise that you read as much as possible. What is a personal loan? How much do they charge? Even when you go to the financial institution, ask them to explain. It doesn't matter how long it takes. They're supposed to sit with you and tell you what are the terms and conditions of that loan. If you really, really do need it, we'll talk about that. If you really, really need it, what is the true cost? Meaning how much you will pay. They must break it down to you, amount by amount, not just say interest rate is 27%. No, because debt includes all these other costs that they don't talk about mostly, right? And find out for this situation, if really you are in a situation where you need debt, in this situation, do I need a personal loan or do I need credit card, or what do I need? Which one will be cheaper? Which one will be easier to maintain, right? So that is information that you will learn as you go and you get more exposed and you ask questions. Never be scared to ask questions and do your own research. Don't rely on someone to just to tell you which one is right. Like I said, people are normally biased, especially when they're selling financial products. They will be biased towards their own product. So it's best that you get the knowledge so that you also can make an informed decision. Even as they're advising you, you'll be able to tell that, oh, this is good advice or this is not good advice, right? And then perceived potential income. Most people, especially graduates, when you start off, you start with training, and then you will qualify either as a lawyer or as an engineer, as a doctor, as an accountant, as a social worker, and so on. So normally at the beginning of your training, you are earning way lesser than what you will earn when you become a doctor. So most people, they are comfortable at that, in that period when they're starting to work, to take on debt because they say, oh, I'll make money one day anyway. Don't make current decisions with future perceptions, because already you are spending income that you haven't even received yet. Do you see that by the time you get to that point, you'll be in so much debt that you will still be in the same position financially, you will still struggle financially. Yes, I know the future is bright, but you'll cross that bridge when you get there. You'll make the improvements when you get there. Don't commit to a high lifestyle when you're starting to work. That lifestyle that you are supposed to be committing to, when you get to that point, step by step by step by step. Right. And lifestyle, materialism, and status. Right. Materially, it's a main problem. Lifestyle, you know, what you wear, what you drive, and so on, right? You know, that someone will say, oh, when you're starting off, I can't drive a certain car. You feel embarrassed that you can't drive a certain car. But that car, it costs you less, the fuel is less, the maintenance is less. It gets you from point A to point B, right? At the beginning, get what works. Get what you need. Get accommodation that you need. Get a car that is reliable, that is cost efficient, right? And Everything else, spend on what you need at that point. And then you will improve as life goes, right? Don't go with the norm of status and you must show people that you are successful, you are working, you can afford and everything. Really, it will only hurt you. The other challenge is life transitions, and that is the one that you will experience mostly. You go from a student to now a young adult. You are starting your life. So that means when you are starting your life, literally from scratch, you are starting from a bed to everything. You must buy everything from scratch. You are transitioning into adulthood as well, where now you have to make your own decisions as well, right? You are now suddenly in charge of your own finances. You must make your own decisions. Yes, that transition will be very difficult and you will find it hard to find your feet, right? But don't be too hard on yourself. You, even with this knowledge, you might make a few mistakes here and there. But the main thing is that you always reevaluate where you are, what's going on with your life, financially and otherwise. And you take it from there, you improve. Others are faced with family background. You start working. Now, at home, you must support. They call it black tax. You go at home, you must build a house, you must so on. Be honest with people around you about how much you can afford. Don't give the perception that you will be able to build a house in a year and then go and take 3 loans at the bank. Be honest and say, you know what, this is how much I earn, this is how much I can afford, and I will do it over this period of time. Don't take a loan just so that you can fast track or correct everything and want to do everything all at once. Yes, we come from different backgrounds, but like I said, be honest and do things. Tell them this is what I can do every month. Every month I can give 1,000 rand. If you are supporting financially, every month I can give 5,000 rand, 1,000 rand. Every month I can contribute so much towards building a house or renovations. Don't overcommit, right? Now, I want to talk about a credit profile and a credit score. So when you work, you will hear this term as well a lot, credit profile and a score. So a credit profile, basically, it's like a screenshot of your financial history. What have you been doing financially? Like I said, a pattern of your financial behavior. And your credit score is a rating or a score. So they take how many debts you have, they look at how have you been paying all your debts, right? Have you been consistent with your payment every single month? And then from there, they determine whether you are a good borrower or a bad one. So if you don't pay your debt, your score goes down. If you pay your debts regularly, they go up, right? So that's how you build a credit score. Now, there's been a lot of questions as to whether a credit score is important, and people feel that they need to take a lot of debt in order to build a credit score. The truth of the matter is that it's not about the amount of debt that you have. So you don't need to borrow 200,000 to build a credit score. You can actually take a credit card of 5,000 rand to start with. A mere 5,000 rand, borrow that 5,000 rand from your credit card score and from your credit card, and then you spend that 5,000 rand, and then you pay whatever installment they say you must pay every month. You pay it every single month like that. You are establishing a pattern that you can pay and you can meet your obligations every month, and you are consistent and you are reliable and so on. That's what they want to see, is your behavior with money and debt. Right? So your credit score is important and you must build one. for the day that you want to actually have good debt, when you want to now buy a property or you want to get a loan for a business and so on, good debt. So it's very important to build a credit score. I would advise everybody, even though you are not really in favor of debt, you believe debt is a bad thing. However, build your credit score. Like I said, you don't have to borrow 200,000. You can just borrow small amounts of money and just, actually you can have a credit card, transfer that 5,000 to your savings account, and then every month it debits the same 5,000 rand from the same 5,000 rand. You don't have to use it, right? Now, like I said, financial institutions, they use it to determine how much you can actually afford. So they look at affordability. The lower your credit score is, the lower amount you most likely be able to borrow. And then your interest rate goes higher. The lower the credit score, the higher the interest rate, the lower the debt you qualify for. That's how it works. The higher the credit score, the higher the amount you qualify for, the lower the interest rate they charge you. Interest rates are different from person to person. Okay, so like I said, it's meant to determine your financial patterns and your spending behavior, right? And you don't have to take out significant debt, right? At the beginning, when you start borrowing, when you start working, right? They look at whether you are permanent at your workplace. They look at how much you earn and how long you've been working for. It's easier at that point in time to get unsecured debt than it is to get a mortgage bond, which is a secured debt. So most likely personal loans, a clothing account, those ones, they will allow you, let's say 3 months you are working, they will most likely allow you to borrow that. But if you start applying for a mortgage house and you are working for like 2 months, chances are that it's not going to happen. And you get a rejection, it takes down your rating, then you can only apply after a certain period of time as well, right? So start off with a small amount, like I said. Things that can affect your credit score, irregular payments. If you skip a month, you pay this month, you don't pay next month, and so on. The other ones, they completely stop paying, and then you are blacklisted. Blacklisted, you will not get that for a certain period of time until you are reviewed again. Debt consolidation, I didn't put it here, but debt consolidation, if you apply for voluntary debt consolidation, that also takes your credit score lower because it says that you are unable to cope with your debt. Therefore, they don't borrow you money. Yes. And then paying your debt too quickly. Now, I learned this the hard way. You borrow 10,000 today, you pay it next week. Your credit score goes low. So banks actually, they don't want you to pay your debt sooner than the agreed term. Like I said, they're trying to establish a pattern. And the other thing, remember, they are there to make interest out of you. So if you settle next week, then they didn't make any money out of you. Tomorrow you come back, they won't borrow you any money. Right? So I learned this like the hard way, like I said, when I went to borrow for something and they said, no, you are a bad debt. And I didn't understand what that meant because I knew I didn't have debt. They said, no, I remember I settled a car too quickly. So if you can, pay over their period. Other ones, yes, try to just add on an additional amount to your installment so that you reduce the interest that you are paying. But to go and settle at once, especially when it's a lot of money, when it's this clothing accounts, it's not a problem. You can settle those. But things like a car, if you settle that too quickly, it's a problem. It takes your credit score down. Over indebtedness as well. If you have too much debt, they will not borrow you any money. So please don't take the debt for clothing accounts, credit card, and everything. By the time you want a house, they don't want to give you debt for a house or something. Now, debt, like I said, we cannot live without debt. How do we manage debt? We manage debt by making use of good debt. You avoid bad debt, and then you Use good debt. What is good debt? Good debt is debt that will benefit you or that has a return. Bad debt is fruitless. It's like a credit card to buy cold drink, clothing accounts, for food, and even furniture. Please don't borrow money for furniture. Buy a bed, buy a bed this month, pay it, finish it. Buy a TV 3 months, pay it and finish it as you go. Don't want to get an apartment and it must be full the same month. No, we all started with a bed, a mere bed, and we sat on camp chairs if we had one, you know, and it went on like that. Don't use a credit card for entertainment as well. Good debt, that will be your mortgage. Your mortgage, if you are taking for investment properties and even your own property one day, right? Now, I will advise something. If you work for 3 years and so on, you are comfortable, you can see, okay, fine, you are comfortable where you are and so on. Commit to buying a property. Don't pay rent for 10 years. Commit to a property earlier on. I'm looking back, I'm like, by now I should have finished paying a property. And I kept saying, no, man, I will move. I don't want to stay here. And 10 years went by, me still in the same place saying, oh no, I will move. And I realized I should be halfway through paying a mortgage by now because it was equivalent to the rent anyway, right? Good debt you take for educational purposes or rental property, right? How do you know that it's good debt? When it comes back to you, there is a return on investment. You benefit from taking that debt, right? Now, the true cost of debt is interest, initiation fees, service fees, credit insurance, and other costs like administration and default charges. Hence, I said when you take out debt, ask those little sentences in small letters, written terms and conditions apply. Ask them to explain to you what is written in there so that you know how much that debt of 20,000 is actually costing you at the end of that. I'm not sure if I still have time. Is it time to open the Q&A?
We have about 5 more minutes, Ms. Julia, before we open up the Q&A session.
Okay, I'll finish up. Thank you. So, a way to manage your debt, cut down on expenses, like I said, and you can add a little bit of extra. If your installment is 200 Rand, every month you add a bit of 20 Rand in there. Remember that 20 Rand extra that you pay, it goes towards your capital debt and not the additional expenses. The lesser your capital debt is, meaning the debt that you actually took out, the lesser your interest will be. So next month when it deducts, that means the interest is calculated on a smaller amount, like I said, and then pay off the debt with higher interest rates first. Have a target, like I said, every single month and say, okay, I want to pay off in this 3 months, I want to pay off this account. And whatever to rent, whatever amount you get, put it towards that debt. Do not ignore your debts when they call answer. Like I said, your credit profile, you will need it. Please don't ruin your credit profile because once it's ruined. And the other thing I want to advise, don't take debt on behalf of other people. I know a lot of people will say, no, but then what if, and whatnot, and whatnot, and whatnot. I've seen people agree that take a loan for me and then I'll pay you. And then you pay. So you feel like, oh no, but I don't have to pay this debt. So this person will be paying, it won't be affecting me. Remember, it affects your affordability because the minute your commitments are higher, the bank doesn't know that someone else is giving you money to pay that debt. They regard that debt as yours. So when you go now and you want to finance something, they say, no, you have too much debt, then you can't pay. The worst case scenario, that person doesn't pay you and then it comes back to you. And then renegotiate your terms. financial institutions are always willing to negotiate. The thing is, you have to ask and say, it's 10%. Is there anything you can do for me? Live there knowing that that is the best deal you will ever get. Source around. Don't just settle for the first thing that comes. Source around and always find the best of the best, knowing that I'm paying the least amount of money and getting the same amount of benefits. Like I said, if you have R1, you want to say, what is the best thing I can do with this R1? How far can I go with this R1? You understand? Instead of 3 items, can I get 5? Then I'll get 5, right? Okay. Now, do not take a loan with an interest rate of 23%, and then you are having an investment of 6%. Rather, you pay off your debt than taking amount every month and then saving it, right? All of it, and then you have a debt this side. I would say balance it, pay a little bit extra towards your debt, and then have some savings. Because the thing is, if you pay your debts and you don't have savings, what happens when you have an emergency? You go back to your debt again. Hence, I don't advise people to just pay their debts and not have savings at all. Have savings still, so that you break that cycle of you would need to go back to your debts again. Where do I start? Compile a detailed assessment of your financial position. Like I said, what is your income? Calculate every cent that comes to you. What is your expenses? Go to your bank statement, look at everything, know what you pay for, what is necessary, what is not necessary, your debts, everything. You must be an expert in your own finances, in as much as you may have a financial planner and whatever you have, but you must be the expert in your own finances. You must understand your finances better than everybody else. Then set financial goals, like I said before, and so on. That is just a repeating. Increase your income streams, spending habits, investment portfolios, right? Now we are at the end. I just want to finish off by saying that knowledge is not power, it's potential power. Knowledge is not mastery, execution is mastery. That is Tony Robbins. So that means that the best way to really be an expert at this finance thing is to do it every single day. Practice, 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 practice. In as much as you read books, practice makes perfect. Thank you so much.
Julia, thank you so much for such an informative session. I'm not going to say much. I think we should jump right into the Q&A session. I'm going to start with a question from Netwadzi. They want to know, what is the best way to save for children's tertiary education whilst you're still young?
Okay, so I know I don't want to now mention institutions, but a lot of institutions actually have savings plan or policies, whatever you want to call them, for children institution. And there's one that I know at a certain financial institution that is associated with the Mandela Foundation, whereby if you put in 100 Rand, they put in, I think, 25%. I'm just not sure about that anymore, but I know they put in a certain percentage towards whatever you have put inside that bank. So there is a lot of those, and they grow over that period, which would be 18 years or so, depending on whichever time you take it. So there is a lot of those, right? I would say rather go for that, because the reason is, one, like I said, you get certain interest. The way they are structured is in such a way that they will grow to a certain point. And then the other thing is obviously the discipline of having it there, because you cannot access it for any other reason other than university. So even they paid over towards the university, you must produce a proof of registration in order for you to access those funds. If you take them out for any other reason, they penalize you.
Thank you, Ms. Julia. Another question from Dr. Madikani poses as, what is your view on debt consolidation strategies by banks and other institutions?
Okay, I'm not in favor of debt consolidation strategies. Like I said, once you go for voluntary debt consolidation, you are saying, I am struggling to pay my debts, right? So there's a whole process that they do whereby they take your finances, they take your debts, and then they say, okay, every month that means you must pay 1,000 rand. It's like basically giving power of attorney, so to speak, to someone. And then they say, okay, fine, every month 1,000 rand will go towards your debt. So once you've signed over that, they are in charge, number one. Number two, like I said, during that time when you are part of debt consolidation, you cannot take on any more debt. So it affects your credit profile negatively, and you cannot take any debt when you are under debt consolidation.
There is another comment from Dr. Valencia that if one has a bad credit record, what strategy could they implement to rectify this?
Okay, so when you have a bad credit record, that means there is one debt or two, whichever. So you need to first find out which debt that you owe that cross that for you to get blacklisted, right? And then from there, once you find out from them, you can get a credit score anywhere now, your credit profile from any financial institution now, they're available everywhere. So they will tell you this is the debt actually that caused you to be blacklisted or for you to have a bad credit record, right? Then you can try to see if you pay that debt, can they revisit your case? Or you have to wait a certain period. In any case, I think you wait, is it 3 years or 5 years in any case for you, after you are blacklisted, for them to not blacklist you again. So find out if ever you can pay off that debt and they take you out, or you are completely blacklisted and you have to wait a certain period of time. So get your information on, have they actually blacklisted you? Which debt is it that they blacklisted you? Can you still pay it off? And then take it from there.
And if you are not entirely blacklisted, what if you're just coming out of university, you have your first stable job and you want to find out, do I maybe have some debt lingering over my name and my ID number? Do you visit a financial institution, or what is the best place for an individual to go to?
Okay, a credit score you can get anywhere from financial institutions, like I said, for one. And then I know with bond originators as well, they also are able to pull a credit score for free. And then I think online as well, I just have to make sure it's a clear credit score or something like that, where you're able to pull your credit score and it will reflect all the debts that you have and what is your credit score currently.
All right. And Kito would like to know, to have your advice on a unit trust that he has not yielded good profit for about 3 years. Do you think he should take back his money and its penalties?
Okay, Kito, I remember, I just want to make a disclaimer. I'm not a financial planner, but I will give you my personal opinion on it. Personally, I took out mine. So I did have unit trust, I think some 2 years back. And after a certain period, honestly, I was not really seeing a difference. So I decided to take them out. And yes, there were penalties, but they were not so, the penalties are not so much that like maybe they take 50% of your income. It could be 3% or so. So it's not going, they're not going to take like all your capital. So personally, I don't invest in unit trust and all these other products from the bank personally. But like I said, I'm not a financial planner. My reason just being because of the return. It was discouraging for me.
Speaking of financial planners and advisors, what is the best way to attain one, especially for young professionals?
Financial planner. Okay. Can I give my example? So I had one, I think 4 years ago. So I got a financial planner, and then that's how I got into the whole let's structure your finances. And they got me into unit trust and is it collective investments? It was a whole portfolio basically. And then I remember I went to her and then I said, I want to buy a property, and so can we basically, I want to access my investments because I don't want to get a loan. So can I get some of my investments just so that I can have at least a deposit? And her advice was that, no, I should rather go and take a personal loan of 29% and leave my unit trust of 6% just so that I can go and finance a deposit. So my thing was, okay, so I should leave unit trust. Remember, if I take my unit trust out, she doesn't get paid because commission-based. So hence I say that sometimes advice that you get is based on what will work for them. Someone can say, oh, my product is bad, go buy next door. Do you understand? Hence I say that, you know what, at that moment, that's when I realized that, you know what, you are on your own when it comes to finances. Even the people that you pay will not necessarily tell you the truth. So yes. I prefer someone who stands to benefit nothing from my decision rather than someone who stands to benefit from my decision. Like now I have someone working on my life covers. Fine, I still go with that person because to be fair, they did structure them well. Then I was happy. But otherwise, immediately when I mentioned and I said, what do you think of another company? No, their company was the best still according. But I agreed to go as I knew that basically it was the best thing, to be fair. But rarely someone will tell you the truth when they stand to benefit something. That is what I will say on the matter. The best financial planner is you. Honestly, you get information, but the one who can make the best decision and be objective and look out for their best interest, the one who has your best interest at heart, sincerely, I believe it's you.
It's you. Do you have the same view when it comes to private bankers?
I don't have a private banker now. I use I don't have a private banker. I don't use all these kitty bank, professional banks, these ones with big fees and stuff. What are these bank cards with big fees and stuff? No, I use the more, I don't want to mention names, but I use a banker. Yes, I had that private banking. and they gave me a whole leather thing and whatnot and
Yes,
whatnot.
yes.
Did I benefit anything from it? The charges I paid, yes. Other than the fact that I didn't have to go on a queue. No, there was no other benefit than the fact that I didn't go on a queue when I went into the bank. So I canceled that and I went to the most simplest bank. Yes, that one. So
I hear you.
there is no benefit to it, but I just want to mention something, right? When you have a reason for doing something, for instance, I could go to, there's a specific bank that I know I would go to and get their card. And my reason at that time when I do decide to get their card is because when you bank with them and you are using that card, you have access to, say, 5 million rand of debt. So say that I'm Julia now, I decide that I want to start a business name. So when you are using this card, the benefits of those cards normally, to be honest, they open up products that other people don't have benefits to, like your unit trust. Like I know if you're using a normal savings or current account, you don't have to a personal financial planner and everything. But once you use that card, they get you a personal financial planner who introduces you to all these big savings and whatnot, and your access to credit increases. So if I have an agenda and I have a use for that, then I would think I will then at that time open that card and take that 5 million and open my business. Other than that, for now, it doesn't help that you pay 500 rand every month for benefits that for now you have no use of. And that's what I said before. Remember, these things you can always take at any time. So if you don't have, people are offering you investment of 5, or they're saying, oh, you can invest in offshore. Do you have money for offshore now? Why are you paying service fee for offshore accounts that you are not using now? Why not take that card when you have, you know, you will actually benefit from that, those products that they're giving you at that time. And I know they give those cards even when you are doing your internship, like as accountant, immediately when you write your board exam, they give you that card. By that time, you're earning 7,000 rand. You can't even qualify for anything that they're offering you, and yet you are paying fees of so much. Do you understand? Others, they give you less interest rates on houses. So when you do get to buy a house, then you can go and take that card of theirs, because now you are buying a house. When you have that card, they will say, oh, your interest rate will be prime plus or prime minus. You understand? Or when you're buying a car, when you bank with this card, you will get interest of, you understand? So only if you know why you are taking it. But if in J, guys, it's for swiping, how? If it's for swiping, go for the one that does not have your name on it and be comfortable.
Yes.
And
There's
be comfortable.
a comment, before we take the last 2 questions, there's a comment that funding your dreams gets a lot easier when you have no debt. Do you agree? What's
They
your
say
take
what?
on that? That funding your dreams gets a lot easier when you have no debt.
Funding your dreams gets easier when you don't have debt.
Yes.
I don't understand. Maybe English has escaped.
I think they're asking, like, what's your take on that? That maybe funding your dreams in the near future is easier when you have no debt lingering over you, when you don't owe anyone or any financial institution.
Okay. I'm not sure if I'm understanding this correctly, but the truth of the matter is that if you take on debt, say you are starting to work, first year, you take out debt of 100,000 rand, example. Now, you want to go, you are working there and then you realize, but here, I can't really grow as a person. for me to grow, I need to at least have maybe an honors or a master's. You want to go back to school now. But now, because you have overcommitted with debts, then some people find themselves imprisoned and held hostage by debt, where yes, you can't pursue your dreams. I'm not sure if that's the question you are asking, but yeah.
But I think you also touched on it. I'm sorry, I think you touched on it when you explained the difference between bad and good debt. Yeah. I think you touched on it. Ms. Julia, do you provide personal financial coaching or not?
Yes, I do.
Okay, and if our members were to approach you for your services, where can they reach you? On email or?
Yeah, I'll provide my details.
Perfect. I think that's the end of our webinar. And before I invite Dr. Valencia to just close and do the vote of thanks, I just want to highlight an event that we're having on the 2nd of November. And I think it's a continuation of the conversation that we had this evening. And it will be a financial planning workshop, which will be in 2 parts, where the first part of the workshop will be on the importance of estate planning. And then the second part will be on managing a positive credit profile. So I just wanted to let our members know that we will have a follow-up conversation, and I think a more comprehensive one for some of the items that you have highlighted today. We will send out emails and the poster and the registration link towards the beginning of next week. But for now, thank you so much for all for tuning in this evening. I'd like now to hand over to Dr. Valencia, who is the chairperson of the Young Professionals in the Northwest, to just do a vote of thanks and close our webinar.
Yes, sorry, I was muted. Lady Julia Sibanda, thank you so much for this comprehensive session that you had with us, giving us the nuggets in terms of financial management. You made it so practical. We thank you for that. My go-home message, which I got from you, is in terms of our financial management, we should not be passive. We should be active, involved, meaning we should not be an extra in our own financial matters. So basically, we should know who we are, where we're heading, and what financial goals we have. So no passiveness. Thank you so much. And I'm glad to hear that you are also offering coaching services. So for everybody that's tuning in, please make use of this. As they say, there's no freedom without financial freedom. And unto the team of BMF that made the technical things possible, we thank you so much. And thank you for everyone that tuned in. Thank you so much.
Thank you,
Dr. Valencia. So, Julia, you're not a stranger to the BMF community, so I will definitely forward you any questions, any queries, and any information of individuals that want to take you up on that offer of financial individual coaching. But for now, thank you so much for availing yourself this evening. It's a constant conversation that needs to be had, especially around students and young professionals around managing finances. Yeah. So we will have a part 2 or continuation of this conversation. But for now, thank you so much for joining us this evening, and to all our members who tuned in. Thank you very much. And if you're a non-member, please visit our BMF website or send an email to BMF Northwest, BMFNW at bmfonline.co.za for any queries and any questions. For now, thank you everyone for tuning in, and enjoy the rest of your evening.